Shares in Shopify fell last month. The e-commerce company reported earnings and plans that didn't delight investors, but the stock has been bouncing back. Mark Mahaney is an analyst who just raised his rating to outperform. He says the pullback provides an attractive entry point. Let's bring in Mark now. He's Senior Managing Director at Evercore ISI. Thanks very much for joining us.
Thanks for having me.
Just remind us, why were investors wary when they heard from Shopify last month? And why do you think we should look past that?
I'm not sure we should look past it, but the last two quarters have given investors a lot of pause around Shopify, but particularly on the bottom line. The company has been leaning into marketing, particularly social media marketing, i.e. Meta, i.e. Facebook and Instagram, for kind of a global expansion. And so that's led to margin outlooks that were weaker than the market had expected. And you had a 10% plus correction in both estimates, bottom line estimates, and in the stock price. I think the stock traded off an average of 15% the last two quarters. So we've seen this now twice. The question you have to ask yourself as an investor is there any change to the long-term thesis, one? Secondly, are we past are we through most of the risk to operating income estimates, to free cash flow estimates? And our call on the second is we think we are. We had a one-time event. We've got a summit that Shopify is hosting this quarter. I think that's negatively impacting margins. You do have a price increase, which is almost always good for margins. That's going to start working its way through the P&L in the second half of this year. And then there is inherent leverage in the business. We find, for these kind of businesses that we've tracked over time. So that's why we became a little bit more constructive on the stock. We've done a series of due diligence checks recently with very large customers and with average size customers. And the biggest strategic pivot at this company, I'd say, over the last 2 to 3 years is a real up-market move. Like, they're moving into the large-scale enterprises. And I think they're being relatively successful with that. So we've got a new leg of growth coming up with, we think now, estimates reasonably in check. So that's why we upgraded the stock.
It's interesting that, we always think of them as the people who allowed small merchants to easily get on the internet. But as you say, some huge names are signing up with Shopify.
Yeah, so that also involves a bit of an investment cycle, because large enterprises have very different needs than small individual entrepreneurs or small businesses. You need more robust solutions. They got to be nicely integrated into companies that often work with multiple vendors. I think Shopify's done a pretty good job of doing that. That's what our channel checks have suggested. I'm not surprised. This is a company that, if you want to look at one metric that shows you how successful they've been with product innovation, we look at what's called the attach rate. So their revenue as a percentage of the total amount of bookings, or GMV, gross merchandise volume, that they generate on their site. And as the company has layered in more and more products, more and more different suites of solutions, you're seeing the take rate, the attach rate go up. That's a sign, like a financial sign for us investors, of successful product innovation. I think they're doing more of that with large enterprises, whether it's capital, payments, shipping, logistics, and then even advertising with this audiences product that they have, although they're not directly charging for it. They also do, again, have this successful price increase. And one of the most interesting data points they gave you last quarter was the vast majority of their customers aren't agreeing to their price increase. They're actually instead converting to 3-year contracts so that they can maintain the basic price. Look, a company that gets its customers to commit to 3-year contracts probably is selling a product or offering a solution that the market thinks highly of, because not too many companies are willing to make 3-year commitments. So that to us was kind of a very bullish long-term indicator, even though there was near-term market noise about expenses near-term. Now,
we often hear Canadian companies criticized for not researching enough, not putting enough into development. But you reckon Shopify has been aggressive in its pace of innovation compared with competitors?
Well, we put this numbers in a report, and I'm going to butcher it because I've forgotten what the exact R&D numbers are. But if you look at the last 3 years, it's a pretty healthy level of R&D spend by the company. Yes, you're right. That's what you'd want to see. I mean, in a typical business like this, you'd want to see more spent on R&D than on customer acquisition or sales or marketing. And I think you pretty consistently, not always, but pretty consistently have gotten that from Shopify. And again, the tell is in the attach rate. The tell is in the revenue growth. And this company is still doing 20% revenue growth, and we think it can sustain that going forwards. Valuation here has always been a challenge with Shopify, but this is also a premium fundamentals name. It's kind of a rule of 40 company, the ability to generate 20% plus revenue growth, and now rising free cash flow margins that'll probably get into the mid-teens maybe next year, and long-term get above 20%. You like to see those rule of 40 companies, and they usually warrant the higher multiples that they normally attract.
So the rule of 40 is that the company's top line year-over-year growth rate and its margin, its EBITDA margin, should be ideally be at least 40%.
Yes. Yeah. The rule of 40 that you oftentimes see in software. And what you want to see is, all things slow down over time. There's the law of large numbers, maturity, gravity, whatever you want to call it. As the revenue growth rate comes down, you'd expect to see the profit levels rise. And so investors will probably pay more for companies, higher multiple for companies with greater top line growth rate, as they should. And then less, but still, you'll still be able to hang on to a premium, and that 40 combination is somewhat rare. So companies that can sustain that, even though most of the growth in the long term comes from margin expansion, but investors look for those kind of assets.
And what about management at Shopify? They are well liked by investors generally.
Yeah, I think so. I don't think there's any unusual controversy over Shopify's management team. I know we've had some changes amongst some of the senior team, but investors generally like to follow successful founder-led companies, and this is still one of those founder-led companies. Of the different entrepreneurs that I've tracked over the last 25 years that have built companies and are still actively running them, Shopify is one of those. It's a positive, and it's an investment positive for anybody looking at the stock.
And Mark, you touched on this just off the top. They're spending heavily on social media, advertising and marketing. So what does that mean? They're putting TikTok videos out, things like that?
Yes, Meta. I actually don't know I don't think they've disclosed whether it's TikTok, Meta, or Instagram. My guess is that it's probably more Meta and Instagram than TikTok, but I may be wrong about that. But that would be my guess. Look, what I've seen, having covered a lot of internet advertising names and retail names and travel names, there's a lot of companies that have really been leaning in to spending with Meta over the last 2 years because the return on ad spend has really risen pretty nicely. There's Meta, to their credit, has done a lot of things to improve that return on ad spend. And so if the ROAS, return on ad spend, is rising, then the right thing for corporates to do is to lean into that. And I've seen other very savvy companies do that. So it doesn't concern me at all that I think it's a positive. I think it's the right tactical and strategic move for Shopify to be doing this.